Foreign investors are buying Nigerian stocks again after an extended time off sparked Nigeria's stock market witnessed a substantial increase in foreign portfolio inflows during the first quarter of 2024. Now, compared to the same period in 2023, these inflows surged by an impressive 415%, reaching 93.37 billion naira. This significant rise, however, is attributed to the depreciation of the Nigerian Naira rather than a dramatic growth in dollar-denominated investments. And not only that, just to pokes with the dollar rate during the same period in 2023. At that time, dollar rate was 461.13 per dollar. And looking at what it is now, that's for the first quarter of 2024, 1,313 naira per dollar in the first quarter of 2024. You probably want to do the mathematics, and when you're done, you realize that it's just marginal increase. And these are some of the things that we will also be considering. And apart from that, when we look at the data that was released by NGX, we find out that portfolio investors contributed $70.1 million in the first quarter of 2024. That talks about inflows. But when we then look at outflow, we see that there is an outflow of $90.03 million. And then when you calculate that again, you see a net forex outflow of $19.87 million. And my first question to my guest will be, how would you explain this? Well, I'm talking about none other than Oladipo Ajayi, the head fixed income and forex, Chapel Hill Denham. Thank you so much, Oladipo, for joining me today.
Good morning. Thank you very much for having me.
All right, so I was talking about, what happened. Let me just begin by asking you this. Now, for foreign portfolio inflows into Nigerian stock market, we saw it reach 93.37 billion naira in the first quarter of 2024. And when you look at that, that's 415% increase compared to 2023. Just looking at it on the surface, it sort of looks good, but let me get your thoughts on it.
Well, if you look at that, it's clearly that you see that there are a bit of interest in the market at the early parts of the year. And when you compare it to last year, and I think sometimes when we are actually comparing year on year, we need to also consider the popularity of the time. Last year, if you understand that last year was when we had our election. And basically, at the period of election, we tend to see a lot of investors actually leaving the market. So it will actually be unfair to actually just look at Q1 last year and Q1 this year and compare them in the same dimension, forgetting that Q1 last year has peculiarity. So that the inflow into the economy this year is actually better than what we saw last year. It should be a given, considering that last year was the period that has peculiarity, and this year is totally a time where governments are already putting structures in place, they're already putting policies in place that can actually help to actually entice and actually bring foreign investors to the market. So I'm actually not surprised. It's actually what should have happened.
Well, juxtaposed with the dollar rates, let's look at the same period in 2023, which was 461 now 13 kobo per dollar, and NGX exchange rate, which is 1,330 now per dollar in the first quarter of 2024. Is there really anything to celebrate here? Because at the end of the day, when you do the mathematics, the difference isn't much. It's just something marginal. 461 compared to 1,330. So at the end of the day, in Naira terms, we might say, oh, wow, a lot of money came in. But, when you look at it, looking at the dollar difference and all of that, you find out that no, maybe not so much happened.
Well, if you look at it from that perspective, of course, you'll be extremely right. Because to actually judge, you are not supposed to judge considering the Naira value that particular point in time, in terms of looking at the conversion of inflows in Naira. What you are supposed to look at is what's the value of.
But let me come in here. The cheaper Naira actually is also one of the things that probably attracted these people. So will it be okay for us to say we do not want to look at that?
So what I'm trying to say is that okay, let's take for example now. We are looking at last year and we're saying rate is around 469, and this year rate is over 1,000. So what I'm saying next is that whatever inflow that comes to the country, we are not supposed to be looking at it from the angle of 1 billion naira came last year, 1.2 billion naira came this year. What we are supposed to look is that what's the dollar value that actually hit the system last year and the dollar value that hit the system this year. That's the best way to actually analyze and actually compare the two timing. And just like what you said, last year was the time that everybody knew, even the whole international markets are very aware themselves. Naira at 460 Naira is not the fair value of the currency, and at that particular point, investors are very shy to actually come to the market because no one needs to come in and get evaluation. And imagine investors that were actually rushed in last year before the election, and remember, just imagine what would have happened to their investment. Immediately, the new administration came in and actually a price window to around 770 there. So it simply means that if you have been in at 460 level, it means that you have lost over 60% of your investment just by the pronouncement of the new government. So it has its peculiarity in times. And so that's why I said that for us to judge well, you just look at what's the dollar value that actually did as Q1 last year in comparison with the dollar value. So with that, we'll have been able to remove the issue of Naira at 460 and Naira at 1,000 plus.
Okay, I'll let that slide. Now, taking another look at the data shows that foreign portfolio investors contributed $70.1 million in the first quarter of 2024, but also recording an outflow of $90.03 million. When you look at that, it's like a net forex outflow of $19.87 million. How do you explain this?
So if you look at the Q1, basically is a time where there's a lot of volatility. And at that particular point in time, a lot of investors would have actually jumped into the market. But simply also another time for some of them to actually back into the market. I imagine that investors that have been in the market for a long time, actually, you start seeing your investment implementing on a daily basis as a result of the depreciation of Naira. Naira actually closed last year around Naira 90 levels. But as at March, the rate was getting closer to 2,000 Naira. So at that particular point in time, it's actually a time that everyone wants to quickly go up. Because you don't even know where it will get to. Because you can't see people projecting 2,500. I even saw someone projecting as high as we can actually get as high as 5,000 Naira. So at that particular point, a lot of investors were actually looking at exit rather than entry. Even the ones that actually ended up coming to the market, they came in as a risk taker and not based on the fact that they feel that there's something that is changing automatically just immediately. So for me, I would not look at Q1 totally. I will actually wait until Q2 to see what actually the figure for Q2. And that gives me the real perspective of the market, because at some point of volatility, you see investors behaving in different ways. Some people are contrarians and some people are actually panic investors. So they actually want to jump out of the market before they actually need to roll up their investment. So what we saw there was like the picture of what actually happened in the market in Q1. Because imagine Naira moving from 1,000 at the beginning of the year and actually climaxing at 1,900. A lot of people were actually panicking at that particular point in time. So people want to get their funds out of the Nigerian market. It was actually those that actually have the confidence that they feel that, it's just a matter of time, and they feel that currency gets to a level where they will start retracing, that actually gamble their funds. So if you also look at what we saw in the month of April, there are times that just in the one particular day, the trading transaction in the NAFEM window was as high as $1 billion. It gives you a perspective of what actually happened post-March, which is post Q1. What actually happened to actually be attributed to the fact that markets is getting stable, Naira is getting stable, and a lot of people are now having confidence to actually come to the market and invest their funds.
All right, so I see you sort of sound quite optimistic. What are your expectations for Q2?
Well, Q2, for me, I think that as we speak, we have seen what has been happening in the equity market. A lot of people are actually sending out their positions, and some of these things could be attributed to the policy of the central bank to actually that mandated banks to actually recapitalize. So we have seen that the banking index has been fully hit and heavily hit as a result of that, because a lot of people are fleeing from dilution of their holding. Some are even selling to actually come in at a later time when they feel that, at that particular, maybe when the banks actually come into the market to actually raise capital. So we'd like to see this happen. But what I think is that I think we are getting closer to the end of that, because some of these instruments are getting to a level that we feel that the action on those names are actually abysmal. So we feel that we start seeing more interest, because when you see banks like Access Bank at 16 Naira, it tells you that there's a lot of opportunity and instrument that's traded over 30 naira. We're seeing GT traded as low as 35 naira. The same instrument that about 2 weeks ago actually hit a high of about 552 naira. So it means that the instrument has lost over 18 naira or 17 naira in the last day. So some of these things will bring opportunities to in Q2, and we'll start seeing more interest coming into that name. Another thing that also is that we'll look at the consumer names. We understand what happened to the consumer name last year. Most of them, they were heavily hit by the exchange loss. We saw that also happening. We will also see that happening in Q1. So I won't be surprised if actually some of these people still posting a bit of exchange loss. Because don't forget, the mark-to-market of their books as a year-end was around 998,000 level. And as a Q1, which we spoke about, rate was still very high, maybe around 1,500 at that particular point in time. It simply means that some of them will take a bit of exchange loss as a result of that. But the solace is that coming to Q2, we will see more interest in those things. Because at that particular point in time now, Naira is getting stabilized. So even some of them will be holding Naira on their book at 1,500 liability. So it simply means by the end of Q2, we can see some of them even booking estimate gain on their Naira debts they actually have on their book. And aside that, if you look at the operational activity of some of these names, they perform very well. You look at a Nestle that has gross profit margin of over 40%, and at the end of the day, ended up wiping out the shareholders as a result of exchange loss. So names alike, they are good names that the investor will actually come in. So I won't be surprised by Q2 that we have seen more interest and what we have seen in the last day. So for me, by the end of Q2, I expect market to have improved. Maybe not as much as where we closed in Q1, but I think it would have been better than where we are currently trading now.
All right, let's talk about pre-pandemic period 2019 specifically, where we saw total transactions reaching as high as $724 million, and that's even with a better exchange rate. I understand there are arguments favoring the participation of more domestic players in the equities market. However, I feel that this level of participation or even more should be desired. Do you see this happening anytime soon?
Yeah, I confess it's something that is we'll see over time. It's not something that we'll see just immediately. But just try to be realistic. There are some investors that are actually interested in coming to Nigeria, but a lot of them are still waiting to clear it. And there's ones that are able to actually jump in at 2,800, and they're already enjoying and seeing the benefits now. But when you have seen the currency touch that high, and also came back to 1,000, also rising to 8,300 above. A lot of people want to be careful at what level to buy enter this market. And that's one of the things that we are seeing currently. And don't forget that most of these people, it's not only Nigeria that the market that they have to face. Most of them that they are managing emerging markets and frontier market for, they look at other markets outside Nigeria. There's Egypt, there's Pakistan, there are many other names on their books. So they are looking at the whole market that's bigger than Nigeria. So it simply means that until when they start seeing clarity and they start seeing stability in Nigeria market, some of them may not actually jump into our space. But for me, I think that we'll get there in a matter of time, but it might not be as fast as a lot of people have expected. We have seen it in the past, and the one thing about market has memory. It can also still test that level of interest as a result of influx of funds from foreign investors and local participations.
I would like you to speak more about, these conditions that will facilitate, their re-entry into the market in their numbers. What are these conditions? What are these macroeconomic conditions or even trends in the exchange, on the exchange rather?
I think some things that, firstly, let's talk about exchange rate. Exchange rate is very key for some of those guys to actually come to the market because of what you use is that you are investing in an asset class that will give you a return. Maybe your projected return is about 30%, but you ended up losing 50% on the currency side. It means at the end of the day, you are net 20% loss. So a lot of them want stability. They want to invest in an economy where they can actually predict. They want to invest in an economy where they can actually miss. They want to invest in an economy where there's stability in policy decisions. You don't want a situation whereby there's policy come where the government will say this, and days later they come and see that and say another thing. So most investors are looking at some of these, that some of the metrics that need to be actually ticked before actually coming to a market. And I think the government needs to actually do that. On the part of being stable in terms of giving a policy direction, I think the central bank has done that, and they have done it very well. Every word that the CBN governor has said, we have ensured that they have full implementation of those bets, and that's one of the reasons why some of the investors, some of the financial investors are actually giving kudos around that. And I think it's also gaining some confidence on the part of some of the investors, foreign investors in the market. And so also we also need to look at the angle of the macro. The macro environment also needs to be ideal. That we need to be stable. The policy that we are showing out is to be policy that is investment friendly. It's not policy that you will see investors cannot repatriate their funds after investment. Some of those things.
All right, Oladipo, I apologize. We're pressed for time. So just before we go, I'd like you to talk about the fixed income market, which seems to be having a field day. Any sign of that stopping anytime soon?
Yeah, for now, I think we continue to enjoy that market. There's a lot of activity in the market. There are buyers everywhere in the market. And I keep saying it, that having return yield, long-dated instrument at 20%, it's good money. It's not something you see every time. It's an opportunity for anybody that wants to go to the market. We see what's happening in treasury-based rates as well. And it also presents a very good opportunity for short-term investors. And I think that this thing will continue until when the central bank put a pause on it. And why I say central bank put a pause on it is that in the short term, in the last weeks, we've been seeing central bank coming to the market to actually more liquidity from the system. And I think what actually drives the market is liquidity. So in as much as liquidity in the system, we tend to continue to see more interest. But whenever the central bank comes in to actually move that liquidity in their own part of actually protecting the valuation of the currency and also actually fighting inflation, we tend to see the reverse happening in the markets. So in the short term, we continue to see this until when the central bank actually visits the market.
All right, thank you so much, Oladipo Ajayi, Head Fixed Income and Forex, Chapel Hill Denham. Thank you for your time on the show today.
You're welcome.